Allendale strategy session. It's Monday, June 8th. I do want to share with everybody just a couple events we've got going on. Get your calendars out. Get this marked down, July 21st, 22nd, 23rd. We will be going through our summer outlook update for you guys and going through just price targets, giving you guys a heads up on what is to come as we finish out this year. So a lot of good stuff for you guys, price projections, trade strategies, the complete fundamental outlook from that point, and then, of course, giving you guys some of the technical updates and chances to ask questions. So mark this on your calendar. Get that set July 21st, 22nd, and 23rd. Something else that we're looking at doing, something that should be beneficial for everybody as we get closer to the end of this month and we start getting focused on this quarterly stock report, as well as what kind of acreage changes could we see. We are doing a one-week blast here, a one-week survey of your numbers, of what you planted, how things are going for you. But as far as corn, beans, and wheat, what do you have in the ground? What did you expect to plant? Are you taking preventative plant, and so on? So get online and submit your numbers. That'd be helping us out quite a bit, and we'll get those to you as well as soon as we can. So without further ado, though, I am going to turn things over to Rich Nelson. We're going to take a look at the fundamentals of the grains and see what he's got to say for us this week. So go ahead, Rich.
Thanks, Steve. Sure appreciate it. We've got a lot of good stuff here for today's discussion here, but like he mentioned, I'm going to reiterate that point he just talked about. Our 2-week survey here as far as this acreage issue, very big deal for us. We are resurveying not just people who helped us out in March, but also new participants as well. So this will be a big deal and should be a very exciting one here for us. 2 weeks.
Sorry.
No problem at all here. As a reminder, let's take a quick look at rainfall here for May. As far as most of the Midwest, we're actually doing fantastic for rainfall. You do have some areas, of course, Dakotas, parts of Minnesota, which are a little problematic. And, of course, a lot of discussion the past couple weeks has been on this southern and central plains region, and anywhere from Kansas down through Texas. So this is an issue with soybean planting, as well as an issue with winter wheat development and harvest and quality as well. Now let's discuss soybeans here for a little bit here and kind of see some of the reasons why maybe soybeans have been leading the way in this little minor rebound in the past few days. In terms of soybean planting, we're really not at all out of bounds compared with normal. 82% is what the average guess is for this afternoon's report. That's right on top of the 81% 5-year average. So I know there's a lot of talk in some of the newsletters you might be reading about as far as soybean planting, concerns about replanting, or concerns about the South just not even getting the job done. But as a whole, we're not anywhere worse than normal compared with market expectations here. So a very clear difference in those two issues. Now in terms of, let's discuss this issue on insurance dates, final planting dates, etc., and kind of go over this again here. We do this as a reminder to our experienced brokers, as well as an education for our brand new brokers as well. Officially, our final planting dates, you hear many farmers talking about this. They range anywhere from June 10th through June 30th, depending on the state. Some states, especially the main Corn Belt states, have various dates within the state itself, depending on the region. And we're not going to go through all these here off the bat. Let's just cover the definition first, then talk about the key states that some people are talking about. So as far as final planting date, this is not the last date you can plant corn or soybeans or crops. This is simply the last date that the insurance will give you a full payment on any type of problem that you have. Farmers can plant after final planting date. The guarantee is simply reduced, only 1% per day after the final planting date. And you can actually have this all the way up to 25 days after that final planting date. And heck, even after that 25-day period, there still is insurance coverage. Just not a whole lot, but there is certainly insurance coverage. So I'm going to make the point here very clearly. The final planting date does not mean that we're done planting. It just simply means that their insurance support is very slowly reduced. So you will still have producers planting past June 10, June 15, June 25th to get the crop done. It will get planted. So let's be very clear about that issue on the final planting date. Here's an example of some of the key states that some people are talking about, maybe in the southern regions, which are not completely planted. On the western Corn Belt side, you've got Missouri, far north or far southwest area. You're talking June 30th, and once you get into the northern reaches, June 15th to June 20th. In my opinion, we're not going to see any major change in planting just based on quote-unquote the planting date. Kansas is another crop where we've heard a lot of talk about. Southern reaches, you're looking at June 25th to June 30th. Northern reaches, you can plant through the rest of this week, almost June 15th. So as far as this goes, there is quite a bit of leeway. Now here's some other kind of odd states. So some states have a one planting date for the entire state, especially these southern groups which don't plant a lot of corn or soybeans in terms of a big amount. So for the southeast regions, Arkansas through Tennessee, your planting date is June 15th or June 25th, depending on if it's following another crop or not here. For Iowa, you have a planting date here, June 15th for the most part, and the Dakotas, June 10th. So as a whole, I'm just going to reiterate again, planting dates do not mean that we're done planting. Now, where we are as far as last Monday's report, which was as of May 31st. Well, you had a lot of planting done here in your key Midwest states. Some of these states kind of stuck out with a lot of crops still left to be planted. I'm going to take out the blue bars here, take out the planting, and let's just look at who's behind. Missouri led the way as of Monday, 4.4 million acres of soybeans still left to be planted. That is a little bit behind what they'd like to see. Kansas, number 2, with about 3 million acres still left to be planted. And maybe there are some valid questions about Kansas, about some of those areas, but as a whole, there are still many states which are still trying to do some work, and this is actually normal. This is normal. So I'm going to be very clear about that. We're not that out of bounds regarding planting right now. You will have some replanting in some of these areas, but as a whole, we're not going to change our estimates on planting here just yet based on this information. Also keep in mind, you've got a lot of the people wondering if those May intention numbers were solid. Here's my computer numbers. These are computed numbers off of the May intentions report, or I'd say the March intentions report. And as we know, prices have changed since then. Some areas favor beans, some areas maybe a little bit less here. Yes?
One question. Is that the 20?
Let's see. Oh, this should say actually May 31st. My mistake there, Jim. So 23 million still to be planted as of the 31st here. Now, the other issue on beans is not just discussion about planting on the U.S. side here, but also soybean oil and palm oil. We've got two things to talk about regarding palm oil, which we don't usually cover in these reports, in these weekly meetings here, but it is something to talk about. In general, there's a pretty strong correlation between all the vegetable oils. And in this case, we have seen both soybean oil and palm oil correlate very strongly here since the 1st of May. So we are seeing a palm oil-based influence on soybean oil as well. And two reasons why. Number one, as we mentioned that story we sent out, we do have a couple governments in the Southeast Asia region which are increasing the amount of biodiesel in their nation's mix of fuel. In the case of Malaysia, as we said here, this could increase domestic usage by about 1 million ton. And as we know, Malaysia is a major exporter. This big difference between production and consumption. And you could push their consumption maybe into that 4.1 million ton range. So number one issue here as far as the palm oil, yes, we do have higher biodiesel usage here to look at. Number two, El Nino. We of course have a lot of skepticism about getting too excited about weather events. But as of right now, we just still can't ignore this fact, and this is being touted by the trade many times over right now. 42% of the world's vegetable oil production is, quote-unquote, in risk in the El Nino areas, Malaysia, Indonesia as well. Now, Drew has mentioned kind of clearly he's a little skeptical about India being hit too much by this current El Nino event, but as a whole, this is something to look at, 42%. So this is going to be a number which we're going to hear more about through all of summer probably, as this El Nino develops and gives some potential problems here for these Southeast Asia regions. So that's another reason why maybe soybeans, if we do have a rally, maybe we could actually see soybeans actually lead the way out of this lower price environment. As far as soybeans, kind of wrapping up our discussion on this one, crop ratings, our very first guess for the whole crop season will start this afternoon. The average right now is 71%. And if so, that would actually be a little higher than both the 5-year and 10-year average first starts. So overall, still a pretty stout-looking crop if it does hit that 71% average guess. On the soybean side as well, those numbers we put out this morning for those May Chinese soybean imports, they were actually pretty much right on expectations here for what the trade was looking for. A little higher, I say a little lower than what one of the government agencies was looking at. Here's one thing which may kind of make people take a little pause here. To make USDA's 73.5 million ton estimate work, they're going to have an 11% increase in imports from June all the way through September. It may sound like a lot, but let's keep in mind last year we had tight bean supplies and therefore a low import in that latter portion of the year. I don't see 11% increases being out of bounds just because of the supplies versus last year. So we're on target on this one here. As far as wheat, let's go back to this chart again here. Massive rains, as we know, last month. Additional rainfall anywhere from 8 to 10 inches just for that month alone, on top of the average. And as you might be kind of surprised about, nobody in the industry thinks, though, that winter wheat conditions actually represent anything close to what's out there. This is simply a rating number that USDA uses based on a visual basis. The trade right now is expecting 44% unchanged for this afternoon. As far as corn ratings, we should have our third week in a row. Average trade gas is 74%. So left, right there. And as a whole, we're still right next to the record crop year from last year in terms of corn good to excellent ratings. So pretty stout numbers as far as that goes. No major problem right now. And as far as grains, this chart shows ending stock numbers since they came out in May all the way to where we are right now with May. So old crop stocks last month were 1.851. Nobody's expecting any major changes on this one. 1.859 is the average guess for Wednesday's USDA report. So 1.851, a very slight bump to 1.859. We talked before about this ethanol issue and the idea that we think that USDA will have to increase their numbers. They probably won't, though, until we see the new crop get established here. As far as soybean numbers, trade's expecting 350 from last month down to 339. And wheat, no major changes there on old crop, 793. They're expecting 798 for the big picture. In terms of Allendale's viewpoint on prices, our price outlooks have been fantastic this whole year. And as you mentioned the past 2 weeks, our downside targets are met for all these grains right now. We think we're stuck in neutral right now, waiting for our quote-unquote weather scare. Traditionally, that doesn't get started until about the third week of June when it does start. So we're basically stuck in neutral on our viewpoint right now on price.
So with us reaching our downside targets, would you say this an area of buy into hedges, or at least not continue to press the downside?
Yeah, and Frank asked about what's our approach with this one. Do we lift hedges? Do we go long? What is our approach? I don't know if I'll be taking off hedges just yet myself. I guess I'll make that clear. mostly we're probably going to be waffling around here. The question here is, what if we don't have a weather rally and we're stuck with 40 cents lower and we don't have any protection on? So for right now, we can't officially call a bottom yet in grains. It should happen, but we can't officially call one here just yet.
All right. Thank you, Rich. Thank you for your comments. Let's flip over. Let's take a look at the charts and see what Monica's got for us here today. So take it away, Monica.
All right. We're still looking at July corn, and you can see the market pretty much stayed within a couple of the moving averages today. The 20 and 40 day, the 20 day is at 360, and the 40 day they're at 366. So a little bit of a tight range. Closed in the upper half of that range, and we're still holding most of the gains that we've made here recently over the last week or so. Right now, I'm not going to, like Rich said, not going to call a bottom here or anything, and we could have more upside. We could test that 50-day moving average at 371. That's the blue line, and even maybe test 375. That's some key resistance that we've been watching over the past month, really. And even if we clear 375, we still won't have taken out the long-term downtrend. So for right now, I'm kind of in a neutral stance, and we've still got a pretty large range that we could trade here from 346 support on up to that 375. And again, if we clear 375, still technically we're in a downtrend. Might be a little bit more friendly if we clear that and have a close above it, but I still won't get full-on bullish until we take out that downtrend, which crosses at 386. So we've got a ways to go before I would really want to be secure in saying that this market is fully bullish. So for now, again, just try and trade this range, that 375 to 346. So we're kind of almost in the middle to maybe the upper half of that. So I guess I would still favor the short side against some of these moving averages and the resistance at 375. So have your orders in place and get them there before, especially before the report comes out. In case there is somewhat of a bounce off the report, you might want to take advantage of that. I don't know if that bounce would get us above 375, but you can always place a stop above that. So that's what I've got on the corn. Let's hop on over to beans. Still looking at July here as well. We closed near the middle of the range today. We did spike above that 949 resistance again. We did that on Friday, but we couldn't close there, and we couldn't do it again today. So we still have just a corrective bounce is what it looks like to me on the chart right now inside of our long-term downtrend. So I'm not turning bullish here either. We've got support that October low from last year at 935 and a quarter. That's also pretty near the 10-day moving average. That's the yellow line at 934. And below that, then we've got some support at 920 and a half. That's where this current rally started. So again, 949 is our resistance. If we close above that, then I'll probably switch to more of a neutral tone. We still have our downtrend in place, and we still have the 50-day moving average at 961, just a little bit below that downtrend. So again, have sell orders in place here in case we do happen to clear 949. I would be willing to sell on some of that strength. I probably wouldn't get bullish unless we would take out the long-term downtrend at 985. So again, like the corn, we've got a ways to go before I would call this a full-on bullish market. And for now, it just looks like we're in a little bit of a corrective bounce, a little bit of a neutral mode. So I'm definitely not getting too bullish on this, but looking to sell some of these rallies up against moving averages and the downtrends. And that's all I've got.
All right. Thanks, Monica. Thank you for your comments. Why don't we turn things back over to Rich now? Let's take a look at livestock and see what he's got for us today. So go ahead, Rich.
All right. Extremely limited numbers traded on Friday, 155 here. And by extremely, I mean under 2,000 in the 2,000 head in the main states, Kansas and Texas here. Very, very tight numbers. We do have kills going on, and we do have sales going on. About two-thirds of these cattle being processed each week are from contracted numbers. Only about a third are free market cattle. So we do have some issues here which kind of mask the what's really going on in the industry here. As a whole, though, 155 last week was the limited numbers of live-based trading. Futures right now are suggesting we'll get down to 153 here in about 2 weeks, down to 152 in August, and then an extremely mild rebound to only 154 for October and December. We're still very, very clearly suggesting that these Florida deferreds are very underpriced, but as a whole, this is what the current market structure is at. What has changed in the past couple weeks? Well, we've got a $20 loss in choice beef off of those highs posted on May 20th. So since May 20th, a $20 drop in choice box beef. So at this point, as most end users are procuring for about 3 weeks ahead of time, we're now past the stage of the bulk of procurement for Father's Day. Then after that, you've got July 4th, and that's normally mostly a hot dog and hamburger featured holiday, not as much on the steak side here. So what these guys are buying for now is a lower demand environment. Also, they're buying for that hotter temperature environment. So in other words, lower demand is up ahead. The other question here in front of us is feedlots. Are they marketing actively, or is a slight buildup going on right now? And I would certainly favor the second issue. I favor both those issues right now. Packers did cut back sharply on last week's kill. We ran at about 10% under last year. And based on those placements we knew from back in fall, we should be seeing kills only about 2 to 4% under last year. So Packers really cut back hard. They've got losses of $100 per head right now, and they're looking at lower demand up ahead in the future. So all these issues have kind of changed this market psychology on a dime right now. We are suggesting that feedlots are getting a little backed up right now with the kills or with the active marketings, and maybe we're going to see an avalanche of problems in the last week or so of this month. So bear side of things here for cash cattle. 153 is what we said that the futures are currently pricing in. We could probably see that down to maybe 150 on the June contract in the last week of this trade. But that's summer futures. The question and our real focus, though, is actually on these far mispriced October and Decembers. We could see these 156 at a minimum, if not a bit higher, maybe even up to 160, depending on what's going on with beef demand and the economy here. So in terms of big picture issues, what I'd be doing right now is either doing these bear spreads, selling the August contract, buying these far deferreds, or I'd be just looking at outright ownership of these far deferreds, maybe in 2 or 3 weeks on a good $2 break on the October or on the December. I probably wouldn't be going outright long on these far deferreds just yet, but give them a little break, and it might be a great opportunity. As far as the hogs, we're looking for a slight bottom in this market, maybe by around Wednesday. See they'll rebound to $84 on the July contract. In terms of the big picture for hedges on the October and far beyond, normally this is the time of year to get work done on those contracts. So $74 would be a great place to work on the October and get some work done as far as hedges on that side.
All right. Thank you, Rich. Thank you, Monica, for your help today. Certainly want to just once again get on your calendars July 21st, 22nd, 23rd for our Summer Outlook webinar, and also our 2-week survey that's going on right now. We could certainly use your help with those and get those numbers. You can do that right on the web at allendale-inc.com, or give us a call here at 800-262-7538. So have yourselves a great week, and we will talk to you again next Monday. Take care.